Imagine if you had SPY puts overnight last night. You sold right here for 100% gain. You now take the 50% of the total position and buy your regular stocks that are down today. And now you get free money here. You pump it in here. And when this goes back up eventually, you've just doubled your money without even having to worry about it. You have several types of investing. You have, okay, let's just break it down. Okay, depending on what your goal is, okay? You have buy and forget, okay? I'm going to put this in quotation marks, okay, investing. You have buy and forget, okay? This is people who every time they get a paycheck or they get a bonus or automatically direct deposits from their check to their 401k, their IRA, they already have the allocation set up, and they either open up their account or don't even, they buy it and they forget it. Because what do they care? They're not looking at it on a day-to-day basis. They're not going to pull it out. They're not going to sell it. They're not looking at it for 20 years. They don't even fucking open their account. They may open it at the end of the month just to see what the performance was. Buy and forget. Now you have your buy value people. Oh shit, this stock has been significantly beat up because of, you know, I watch TheStockGuy or I watch so-and-so. And Trade Desk had really good earnings, but they announced a 10-for-1 split and the stock dropped 27%. I think that's an overreaction. I agree with them. I'm going to buy that dip and forget about it. And now they're up 45% in 2 months. But they don't care because they're not even looking at it. Or they look for something that's in value in a market or whatever. Then you have your spec investors. Okay? I believe that telehealth in the next 5+ years is going to be a $300 to $400 billion industry. So I'll buy now. But I don't care because that's something I'll revisit in a couple years. Sure, I bought LFMD at an average of $7.50. It ran all the way to $16 or something. I was up 110% on shares. And guess what? It's all the way back down to $9. Now I'm only up 25%. But I don't care because this is a 5-year play. Sure, I could have sold the top. But I don't know where the top is. And I expect this to be $25 plus in the next 10 years, 5 years. But the thing is I don't care what it does this week or last week. Everybody, Stocky, are you still in LFMD? Are you holding it? Bro, this could have gone to $20 a share and I wasn't going to sell because I'm investing. I'm not trading this. I'm investing this. Okay, there is a difference between investing and trading. If you are swing trading, you go in with a price target up and down. You are either investing or you are trading. It's like a house, right? You're either buying a house as an investment or you're flipping the house. If you're buying this house to live in it or to use as a rental property or to hold on to for it to increase in asset price, whatever like that, you want to get low rates, 30-year mortgage, you want to hold on to this for the long term because that's your goal, right? You don't have a time frame to sell this. A flipper goes in with a specific goal. I want to buy this from the bank at auction, okay, and then I want to hold it for 30 days, and then I want to sell it. Or I want to go in and renovate it, and I want to sell it because I want to make a positive gain in a short period of time. Okay? That is a trade. That is an investment. It's the same thing with equities. So please, 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 when you guys hear, when I hear you guys say, Stocky, I bought stock XYF, right? Remember we talked about XYF like last month when it was like $2.49 a share? You get into something like this, right? So we talked about XYF a month or two ago, okay? And it was $2.49, and we were talking about unusual volume and stuff like that. A lot of people went into this with a trade because they don't know enough about it. There's not enough, understanding of it to be an investment, so they went in with a trade. And some of them said, okay, I'm going to get it at $2.49, and I'll stay in it for 30 days, or if it drops down to $1.99, I'll sell on the bottom side, and if it gets to $4, I'll sell on the top side. Whichever one hits first. And that's the goal. You should have a time and up and a down on it, right? Now, what happens? Somebody sold at 4 and now it's what? $14.30. So it's up like 600%. Sorry, we didn't know it was going to go that much. Okay? So what I'm trying to get at is please, 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 an investment you don't care about now. I know a lot of you guys are new to the market. And a lot of you guys have seen Wolf of Wall Street. You guys have seen all the fucking YouTube ads, all that shit out there, and you think you are going to trade your $1,000 account to $1 million account and you are going to live on a fucking yacht. It's not going to happen. It's not going to happen. Okay? Invest your money. Okay? And then play money. Okay? Actually, I should correct this. I should make it look more like the other guys in the locker room and you. Okay? So invest should be much larger than the play money. Play money is money that you're willing to lose or that you have set aside as an investment that you're willing to write off as a loss. Please, 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 please. I know that I have to do this every time the market gets red. But you know what's funny? You want to know who the real Chad is in this community? The real fucking Chad in this community is the guy who found this channel during the COVID drop, dumped all his money in fucking... That guy's up like 70% since a year ago. He probably hasn't even checked his portfolio this week. He may be up more than that. He may be up 100%. He hasn't even looked at his fucking portfolio. And when you get lucky with your play money, you take the profit and you dump it into days like today. Imagine if you had SPY puts overnight last night. Okay? You sold right here for 100% gain. You now take the 50% of the total position and buy your regular stocks that are down today. Okay? And now you get free money here, you pump it in here, and when this goes back up eventually, you've just doubled your money without even having to worry about it. What is FATMAG? So it used to be FAANG, which was Facebook, Apple, I'm sorry. It used to be FAANG. Facebook, Apple, Netflix, Google, oh, jeez, I can't even fucking write today. There we go. Facebook, Apple, Amazon, Netflix, and Google. Okay? That used to be it. But then Netflix no longer became that big of a market cap. So we ended up adding Tesla, Microsoft to those. So now we call Facebook, Apple, Tesla, Microsoft, Amazon, and Google. Okay? So we went from FAANG to FATMAG. Some people don't put Tesla in there quite yet because they think that the market cap is completely bullshit and it's going to come back down. So, well, I better be careful because that could be spent around differently. Am I still holding my Walgreens? Yeah. Guys, I don't know how else to explain this. I think it's very, very difficult for me to understand. I think that a lot of times you guys see specific trades on the daily and you know, especially if you're new to this market and you haven't been investing for a long time, I think a lot of people misunderstand what an investment is. Okay, an investment is the purchase of something that you expect to hold and gain value over time. You don't look at the day-to-day. You don't look at the week-to-week. You don't even look at the month-to-month, right? You wait for time. If you buy a house right now and in a year the value of the home drops because of whatever reason, you don't immediately liquidate your home. You know what I mean? You don't sell it. You just, it'll go back up. You're buying that asset for the long term. You're not timing it perfectly. So when I have something like Walgreens, which has been getting beat up, remember, I've been in Walgreens since $36. So I'm still positive on Walgreens. But I'm holding it for the long term. Not only because that divvy is going to pay me every quarter, but also because I'm expecting Walgreens to grow and get, once all the dust settles and we price in the whole Amazon and the deliveries and the all that stuff like that, them opening up all those clinics with Village MD and them doing all those things down the road, and the push for more pharmaceuticals and more healthy lifestyle post COVID, the next pandemic, people freaking out. I expect, okay, their growth over the next several years. I don't plan on dying next year. So I don't need to worry about that. That money that I have invested in Walgreens, even the ones that I bought at $48 the other day that are down, that money was going to be sitting in my bank account doing nothing. Sure, the value of the asset I own is worth less than it was when I bought it, but by the time I sell it, it'll be significantly more as opposed to leaving that in cash. You guys have to understand, when you buy something, you need to have a plan. Is it an investment? Is it a trade? Or is it a fucking gamble? Like a straight YOLO? Which one of those three? Please stop focusing on the day to day. You cannot do that. You will drive yourself crazy. You will make bad decisions. You will sell shit in a panic. And the next thing you know, it moons. And then you'll buy back into it. And then it'll fall. And then you'll buy it. And then this is what will happen to you. You are either, I am an investor first, a trader second. Okay. That is how I live it. I have shit that is down. Let me see. I'll give you an example. Let me open up my other account here. I have shares of something I bought 2 days ago that's down 21%. Pretty fucking stupid, huh? But let me tell you something. For those of you guys who've been with the channel for a long time, I bring it up all the time, but I'll do it again. I told you guys why I was buying Stitch Fix at the beginning of the pandemic. A lot of people thought I was stupid. Nobody knows about Stitch Fix. It's trash. Their customer service sucks. Nobody's going to pay for clothes online. Okay? That was right here. I bought it, and I was down 20%. 20% in a month. And I sold for 150% 6 months later. Let me give you a little fucking secret right here. Why do people like bonds over equities? Okay, why is it that when people get older or have more money, they want bonds over equities? Equities will make you more money when shit is good, but will wreck you when shit is bad. Bonds are a quote-unquote guarantee. Well, it's about a sure thing. Okay? Now, the more stable the bond, the less it pays you. Right? Because you're the more stable the backing behind the bond is, the less you get paid because it's more guaranteed. So a government bond, a U.S. government bond is going to pay you absolute fucking dog shit because the government is not going to collapse. But at 1%, that means if you put away $10,000 in bonds, okay, you will get $100 per year every year for 30 years. And then at the end of it, you'll get your $10,000 back. You're not even beating inflation. So in that case, if you're young, you don't want bonds. If you're old and you don't have time to recover in case of a market crash, you want something more stable. You want something that's going to give you a little bit of growth, but is not going to crash because fuck it, you're retired and you don't have 5 years, right, to gap back up. If you're young, you don't give a fuck. You go all in on equities. You go all in on tech. You go all in on fucking Tesla, whatever like that. But here's the caveat: what determines the rate of the bond? Risk. The more the risk, the more the rate. What bonds have the most risk? Corporate bonds. The more likely that company is to go bankrupt or get liquidated or get fucked or do stupid shit, the more that bond is worth. And why? Because if that company goes bankrupt, you lose your fucking money. But there is a sweet spot. Amazon just recently issued $400 million in corporate bonds. There are corporations and companies out there that issue corporate bonds. If you have the ability to get corporate bonds on a company that is most likely not going to go fucking bankrupt because they get bailed out and shit. I mean, do you know how many airlines are fucking issuing bonds right now, guys? Okay. You did not hear this from me. But what I like to call the sweet spot. There's always risk involved. There's always risk involved. But like the sweet spot is corporate bonds. Now, not all of your money, obviously, but by buying corporate bonds of something, let's say fucking Amazon is giving out at 4.4%. Now, they're not going to do that. But let's say 4.4% on a 10-year bond, right? Because Amazon they don't need the capital, but I'm just throwing it out there as an example. That means if you put $10,000, they are going to give you $440 every year. They're going to cut you a check, and then in 10 years, they're going to give you your $10,000 back. You beat inflation. You're kind of guaranteed they have to pay you, and unless Amazon fucking goes bankrupt, okay? Now, I'm not saying they're going to give 4%. It could be less. It could be, but it's most likely going to beat out a government-backed bond. Now, not everybody has access to it. Some of them are closed auctions. Some of them are issued to shareholders on record. Some are issued to private investors. Some are issued to government entities. Some are issued to the central bank. I'm just saying one thing that no one ever talks about when it comes to investing is investing in corporate bonds. I don't know why. Now, once again, it is not that easy to get. You have to either know somebody or your brokerage has to have it set up or it has to be a large offering or something like that. But keep an eye out on specific corporations or companies that are issuing they're issuing corporate bonds that are open to the public or through your broker that you're able to get. And it might be something you want to add to your portfolio that a lot of people don't. You just sit back and fucking collect a check. And there are corporate bond ETFs. I'm talking about municipal bonds obviously pay more because municipalities have more likelihood to go bankrupt than, I got a buddy of mine who got municipal bonds from the city of Miami back in like 1998 or something like that. His parents bought them, and he just gets fucking cut a check every single year.